Steve, was because the Biden plan, at least from a tax standpoint, isn't as bad as some feared. We're talking about Apple, one of the largest buyback companies on planet Earth, if not the biggest. There is the provision in here for the 1% surcharge on corporate stock buybacks. Do you think that's going to have any impact whatsoever on companies' willingness to continue to buy back their stock?
I don't think it'll impact whether or not they do. I think it will impact on how much they buy back. They'll have to account for it. We really don't know how that's going to work in practice. But no, if you're going to buy back and you'll just, you're not going to let that be a cost over and above. It's going to be embedded into what you do. So, look, I think there is some relief in the market that the tax situation isn't, worse than it was. But I'll also tell you that the people I speak to, and you and I have had these conversations, nobody really thought that the onerous tax increases were going to take place. That's pretty clear. And we still don't know if these tax increases will occur. I'm actually surprised Biden came out so optimistic about the plan when we still have the moderates, or not the moderates.
The wild card, obviously, the progressives on the far left.
Right. And who came out this morning and said, this is still a no-go for us. So I wouldn't count it yet. I'm surprised the market is. And actually, I don't think they're putting much into it. It's more that we're midway through earnings. Things look good. We had good big tech earnings. I think there's expectation that they will follow through to Apple and Amazon today, so they're getting it from
Well, it wasn't lost on me at all, by the way, that the president was scheduled to speak at 11:15. He was at least a half an hour late. And from all indications of following Twitter feeds of various reporters up on Capitol Hill, the negotiating is still going on. So your point is well taken. We'll just go with what's said to be in the framework. Josh, what about that on the issue of buybacks? Because when you talk to people who are bullish the market, optimistic on where things can go, one of the points that people frequently reference is the power of buybacks. Will this in any way influence corporate activity?
I don't think so, because it's not a big surcharge. It's not particularly punitive, and it's still a better deal than dividends. And I know this is controversial. People, cling to these dividends. But in the end, that's double taxation, and the buyback is not. So if you add a 1% surcharge, so what? But on a dividend income that a corporation is paying out to return excess capital to shareholders, the corporation is being taxed on the earnings, and then they're paying out that dividend, and you, the recipient, are being taxed on the additional income. So that will never look better than shrinking the float, increasing the earnings per share bottom line that way. And so I don't think it'll have a big impact. On the corporate minimum, 15% globally, I'm okay with that. I could live with that. I think it makes sense. I don't think we should have profitable companies that write down everything to the point where they pay no taxes. I don't even think that'll be a contentious point in the negotiations. The billionaire tax is bad policy, but it'll probably happen because it affects 700 people, give or take. And those 700 people, while powerful, probably aren't more powerful than the 300 million Americans who would look at that and say, yeah, all right, that, tax them, not me. That's fine. So I actually think a lot of this will end up going through, and I don't think it's going to have a catastrophic effect in the markets anywhere. I think it'll be perfectly fine.